Hey traders, welcome to Charts and Coffee. Hope everyone's doing well. Oh, look at this. I'm coordinating with my mug today. Complete accident. All right. Hopefully everyone is having a good morning. We are taking a look at an open that seems to be so far a potential inside candle on the daily time frame. So while the candle is up, right? While the momentum is bullish, remember that we are not escaping the range of the, as you can see here, Monday candle. That's an inside day or inside range. In other words, today's candle so far, although it's very early, today's candle is trading within yesterday's range. There are some classic candlestick patterns. This is one of them. My two favorite patterns, and I use these a lot, both in the futures room and in the Sector Secrets Mastery, are simple little patterns like inside days. For those of you that are Japanese candlestick fans, it's a harami, right? Minor lows, minor highs. These are the building blocks for me of really understanding the shift of sentiment or even the acceleration of sentiment at certain price levels. So inside candle today on the indices doesn't mean that it's untradeable, not in any way. It just means be aware that the market is sitting in a range where it's not willing to escape the higher low of even just yesterday. We're stuck inside that range. By the way, when we're stuck inside ranges, when ranges start to contract, the first thing that goes off in my mind is, let's look at those 5-minute time frames. Let's look at those day trades, because ultimately what we have is a range that is narrower. And yes, eventually we can get some momentum and some movement, maybe some exhaustion and a re-entry of the range at the extremes. But in the meanwhile, shorten the time frame and let's let our trades not need to rely on significant amounts of movement outside of, well, where it is right now. A lot of times traders, myself included, a lot of times us traders, we want the market to go somewhere. But as the old saying goes, we trade the market we have. We don't get to trade the market we want. I mean, we would all want 2020 back again, right? Easy peasy lemon squeezy on that. But we trade the market we have. All right, with all that being said, just a quick pit stop at the economic calendar. And when it comes to the economic calendar, I know I use Forex Factory a lot. I love the Forex Factory calendar. But one thing that I would really recommend is, frankly, 3 calendars. It's not overkill. Each has a job. One is the estimized calendar. We're in earnings, gang. That's the best way to understand the path of earnings, expectations of earnings. They are the best whisper numbers on the web, and I keep an eye on that. The next one is trading economics. Not because I love this one so much better than Forex Factory. I look at them both. Trading economics tends to have the events from FOMC speaking, scheduled events on the calendar more so, say, than Forex Factory would. You'll notice that Brainerd is missing from today, Tuesday the 19th, on Forex Factory, and it's listed here on Trading Economics. Again, I think they're both valuable sites. I use them both. Just know that certain speaking events just won't be on the Forex Factory calendar. So please keep an eye on those 3. And the other one that I like to use is called Estimize. And Estimize allows me to keep an eye, and I haven't logged in yet, but Estimize allows me to keep an eye on the different hot zones by way of earnings releases that are coming up. And I don't mean earnings releases this week or next. I'm talking about a much more proactive approach to preparing for earnings that starts, say, 6 weeks out before the actual hot zone. And that's the way I think about the ramp up or even the ramp down into earnings events. All right. So with all that said, this show, after all, is about your questions. So let's go ahead and jump on into those right now. And grab my charts again. There we go. All right. So let's get to it. First up is, hey there, Isaac. What are my thoughts on WDC, sure. So WDC, looking at the daily time frame, looking at the structure. I don't follow WDC that closely, Isaac, and I'm sure you know, for whatever reason, we had this drop here. I'm sure it was some kind of news. But we have this drop here, and that drop ushered in a move from what was an uptrend to now a neutral market, to then a neutral market, and now a downtrend. So this is a short the rip. In terms of the adjustments, a couple things I want to point out here, and this is mainly for folks to train their eyes, not so much as analysis of what to do now. Really important though. This is your Darvis 2.0 or 3.0 if you have my premium version support. Automatically drawn based on previous highs and lows, using those previous minor lows, minor highs, call them swings, call them bologna sandwiches, it doesn't matter, but previous highs and lows. Once we test this, if we don't bounce from this level, that's telling us that we're not at an oversold support level, and there's very likely going to be a continuation of movement to the downside. Take a look at this 200 propulsion. That 200 is huge. Being above or below that, it's very much in terms of geography as if we're above or below the equator, right? That's the way I look at that 200. Very important. Now we've got a downtrend. Now we have the opportunity to short the rip. And yesterday we popped up into what I would consider to be two means. We have the agro mean, reversion to the mean at the 21 propulsion. That's the replacement I use for the 21 period exponential moving average, and the 34 EMA wave. The 34 period exponential moving average, notice there's three lines: high, close, low. That's the reversion I like to focus on. That to me is that reversion to the mean in that zone. That's what I would focus on there, Isaac. And in terms of the sentiment, last thing is, where are we in terms of that window to earnings? So keep that in mind. Hey there, Alan, how are you? 6A, 6B, 6E. All had very nice runs after 1 a.m. Okay, let's pull that up. After 1 a.m. this morning, no, I didn't partake. In my experience, do they seek a mean now? So 1 o'clock, let's tackle the 1 o'clock to 2 o'clock transition. That is the hour going into the European Open, Frankfurt, Paris, rolling into 3 a.m. Eastern, that's London. And you can see once Europe and the UK, Paris, Frankfurt, London, all those three financial centers are going. Yeah, that's some kind of double green uptrend. Isn't that beautiful? The thing to remember is time in terms of when we might see a reversion to the mean. First is 4, second is 7 a.m. Those are important time-based confirmations of, as we're transitioning from one window to the next, in terms of our day trading windows, does the sentiment and the trend remain intact? Because you're getting new eyes either coming into the market or leaving the market. So it's a really good, those two times are really good gut checks for, is the trend going to maintain? Is the sentiment as we're going into the Asian close going to hold? As we go into the US Open, and you'll notice this is where the transition began, just after the first cup of coffee in the US. So I would look at time there. That would be my focus, Alan. Cool question. All right, next up, Kathy, can I give a link to the chart that plots real rate of interest? Oh, okay. So you want the real interest. So the real yields, whatever you want to call that. Yeah, sure. So when we're looking at real yields, my preference is actually for, you can use this one right here. It's longtermtrends.net, and I would Google longtermtrends.net and real interest rate. If not, the URL is longtermtrends.net/real-interest-rate. rate. And that's a really good one. That's a really good one. There's a bunch of them you can get on the internet, but this is the one that I really like to look at, because when I'm teaching traders how to understand macroeconomics and how to understand what the nominal yield of a bond minus the rate of inflation means to, say, gold, and that real yield or that real interest rate, this is such a great way to visualize it, because you've got the nominal yield of the bond, you've got the inflation, all of these are graphed, and you can see how they're affecting each other to create that real yield. So that's the one that I like to use, Kathy. There's a lot of them, but when I'm showing traders how to understand macro by way of that particular chart, that's usually where I go. So thanks for the question. Peter asks about UNG. Sure. So whenever we're looking at natural gas ETF, we want to start with really what is the touchstone market for the natural gas market, and that's the futures contract. So what I've been really teaching for a lot of years, gang, and it's not difficult, and it's something most folks will have access to. If we are going to wander into the S&P, the long bond, the 10-year note, crude oil, gold, natural gas, there is a futures contract that has what we'll use. I don't want to use wrong and right or good or bad, because those are so subjective. Let's talk in terms of complete and incomplete. If I know a market's trading and the instrument that I want to trade it through is not open right now, then I know it's an incomplete view of that market. Natural gas has a natural gas futures contract that trades throughout, not 24 hours, but pretty darn close, versus UNG, which lives in this tiny little world of 9:30 to 4. Once I get a read on NG, then I can migrate over to, how do I want to execute this trading idea? Natural gas futures options, maybe the UNG ETF, or maybe options on the UNG ETF. That's the choose your own adventure choice you can make. Natural gas, I have been telling traders to stay away from, mainly because, well, price-wise, technically we are no longer in a trend. It's chop, and chop can be a killer. We were in a downtrend, and I was warning traders, and I hope you see now why not to short Natty. Why? Because the downtrend organized when the Freeport terminal closed. Not a big deal. However, since then, whether or not they opened partially in 90 days, whether they were going to open in 30 days, right now, natural gas is moving based on when does that export terminal reopen and to what capacity can we get crude out of the U.S., in other words, reduce the supply that's in the U.S., which is why Natty was heading lower. Now we have chop again, because that trend, as I feared it might, because it's going to be highly reliant on whatever news is coming out of the Freeport terminal or whatever is keeping Natty on pins and needles, it did exactly what I feared it would. Completely ignored the structure, which was pretty fresh, therefore vulnerable, and we're right back into chop. My advice is leave it alone. Let it be. I think there are better places to look for opportunity. One way, Peter, you can look at sort of a related Natty would be take a look at the stocks within the, here we go, FCG. This is your ETF for natural gas stocks. Companies who, they depend on whatever they do with natural gas, whether it's transporting it, whether it's refining it, whatever. That's their niche. FCG. I would keep an eye on that. And that's the way I would look at it, Peter. Be very cautious with Natty itself, but I would say keep an eye maybe on those FCG stocks or FCG itself. All right, next up. Hey there, Nick. How are you? What do I think is the most effective strategy to growing a small account rapidly? Nick, I'm going to tell you the truth. And not 1 in 10 traders are going to tell you this. A crazy uptrend. Just an uptrend. I think a lot of times, and I can appreciate the question, Nick, is there a tactic that is going to work to grow small accounts? Yeah, there's only one. Understand position sizing and risk management. Because on the flip side of growing a small account is risk, right? This is my take, right? This is my take. I don't specialize in small accounts like a 500. I actually don't encourage traders to start off with $500 and trade. Other traders can, and you mentioned Allison. I'm a huge Allison fan. Allison's great, and that's her thing. It's not something that I would encourage or recommend. But more importantly, I don't do it because I've never done it. The smallest account that I've ever had was $1,200. That was when I first started trading at 15 and a half years old. And so I have never sat down with a $500 account and decided to grow it. I really haven't in a serious way. So I don't have the background to tell you, here's how you grow a $500 account, but I'll be straight up, Nick. I wouldn't recommend it either because I think there's too many pipe dreams attached to that. And if you watch Allison's work, and I admire her greatly for emphasizing this when she does it, is she's very, very aware of risk, and she's very realistic about the upside. She knows that we're not trying to double a $500 account in a day. That's the mindset of most traders. So I'm going to go back to what's the best way to grow a small account, regardless of the sum. To me, a small account's anything less than $5,000. That would be quote unquote small. An uptrend's the absolute best way to do it. Am I going to take a trader with a smaller account and say, this kind of choppy environment in the midst of a monetary policy transition globally is a great time to be trying to grow a small account? Probably not. It's a great time to demo trade. It's a great time to learn. It's a great time to take classes. It's a great time to join some sort of mastermind where you're with other traders and you see how to manage this market. It's a great educational window. So is there a most effective strategy? Controlling risk, right? Understanding position size and controlling risk, and then rinse and repeat. And then when you do that, you're no longer thinking, let's double my $500 account. Not that anyone here is. If you're listening to me, you all know for the most part what I would recommend. But if you're looking to do that, definitely seek out someone whose speciality is that, because it's definitely not mine, right? But I do believe a $5,000 or less account would be considered small. Is a small account tradable? Absolutely. I do think you can trade a small account. You have micros, you have inexpensive options. Would I recommend futures day trading? Not in a million years. A lot of folks say, Rog, can I day trade futures with $500? No, negative, Ghost Rider. Micros are okay because they're a smaller amount of dollar per dollar increment right on the ticks. But for the most part, I would say if you've got a small account like that, spend some time learning and then trying to grow that account to maybe $2,000. That's always my advice there. Next up, what is the probability that Roblox sees $25 again between now and September? Not a clue. Gang, let's not ever believe, and I talked about this yesterday, people will answer this question. I'm going to tell you this right now. Football season's coming up. I live in South Florida. That's akin to asking me, do I think the Miami Dolphins are going to win in week 3? Or worse, what's the score going to be? Yet somehow that mindset has permeated itself into trading. Gang, nobody knows, right? We know what the trend may be. We know what the ranges may be. Is 25 out of the question? Of course not. We've been there before, but is it going to go there between now and September? I cannot emphasize this enough, gang. Nobody knows. Nobody knows. What we want to do is ask ourselves, let's shift that question a little bit. And again, I'm not in any way telling folks, good question, bad. And that's not my point. My point is, let's stop thinking that someone out there knows it. And I'll tell you what, if someone answers that question, they're full of it because nobody knows. I'm going to just put, it's really, every now and then when I turn on CNBC, I watch these people prognosticating about where the markets are going to be. Really? Are you broadcasting from your island? Because clearly, if you have that kind of power in the market, you're not broadcasting from your home office. Yeah, we know the truth about this, don't we? Yet the mind wants that certainty. I get it. So what we can do is we ask ourselves, if my expectation is for the market to revisit 25, how would I position myself to take advantage of that? If I believe we could go to 25, what would I do if we get there? Notice it's a similar conversation, but coming from a completely different mindset. That's how traders think, right? The other way is how folks are thinking, some traders, definitely not me and not anybody that I know, can predict where a market is going to go. So I hope that makes sense. I appreciate the question, but I hope you realize, my friend, nobody knows. Nobody knows. So we ask ourselves, what does 25 mean to me? Is it a target potentially? It clearly, I agree, would be an oversold potential buying opportunity. If I think that's a buying opportunity, I wait. If I think we could get down to 25, I try to make sure I take advantage of an overbought resistance zone and use that maybe as the second target, the first or second target. So that's what I would love. For those of you listening to the show, if that resonates with you, you've come to the right place. If it doesn't resonate with you, hey, the best I can do is always be straight up and honest with you all. Nobody knows where the markets are going to go, gang. Nobody. So the more we think about how do we take advantage of these price levels and counterpunch, the better off we're going to be, the more realistic our risk management is going to also be. All right. Thank you, everybody, for your questions. I sincerely appreciate them. And I hope that this approach, this mindset, the way we look at market structure, in other words, structure dictates strategy, strategy dictates indicators, helps. All right. So with that in mind, thank you for being a part of Charts and Coffee. Caffeinate and dominate. We're going to go do some day trading here for just a bit in the futures room and in my mastery. So I will see you all tomorrow, same time, same station. Be good to each other.